Solo Scrooge, sending peace and blessings to you all out there. Hashtag Solo Nation. What's going on, my people? Appreciate you all for the love and support of the channel. Just going to run over this article quickly and then we'll take a look at the Sologenic and the Coreum chart. Killer use case. Citi says trillions in assets could be tokenized by 2030. The bank predicts the private equity market to become the most tokenized asset class because it's more liquid and can be fractionalized. Investment bank Citi is betting on the blockchain-based tokenization of real-world assets to become the next killer use case in crypto, with the firm forecasting the market to reach between 4 trillion and 5 trillion by 2030. That would mark an 80-fold increase from the current value of real-world assets locked on blockchains. Citi explained in its Money, Tokens and Games March report, we forecast 4 trillion to 5 trillion of tokenized digital securities and 1 trillion of distributed ledger technology, DLT, based trade finance volumes by 2030, the firm's analysts said. Of the up to 5 trillion tokenized, the bank estimates 1.9 trillion will come in the form of debt, 1.5 trillion from real estate, 0.7 trillion from private equity and venture capital, and between 0.5 to 1 trillion from securities. The research suggests that private equity and venture capital funds will become the most tokenized asset class, capturing 10% of its total addressable market, with real estate coming in next at 7.5%. Private equity markets will likely see faster adoption rates because of their favorable liquidity, transparency, and fractionalization properties, the bank said. KKR, Apollo, and Hamilton Lane are three private equity firms that have already set up tokenized versions of their funds on platforms like Securitize, Provenance Blockchain, and ADDX. If Citi's bullish estimates are reached by 2030, tokenized assets will still only represent a small share of the total addressable markets. Citi said that the blockchain tokenization would supersede legacy financial infrastructure because it is technologically superior, and it provides more investment opportunities in private markets. Tongue twisting. Traditional financial assets are not broken, but suboptimal as they are limited by traditional systems and processes, it said. Certain financial assets, such as fixed income, private equity, and other alternatives, have been relatively constrained, while other markets, such as public equities, are more efficient. Citi argues that blockchain tokenization negates the need for expense reconciliation, prevents settlement failures, and makes tedious operations ever more efficient. What DLT and tokenization offer is an entire new tech stack that lets all stakeholders do all activities on the same shared infrastructure as one golden source of data. No more expensive reconciliation, settlement failures, waiting for the faxed documents or originals to follow by post, or investment choices being restricted by operational difficulty in access. The investment bank did, however, acknowledge that there are drawbacks at present, such as a lack of legal and regulatory framework, challenges with building the infrastructure and obtaining a widely followed set of interoperability standards. Coreum is the interoperability standard. Related, asset tokenization. So Citi also noted that some industry players remain skeptical too, particularly in light of the Australian Securities Exchange ASX recently scrapping its failed 165 million DLT project in November. There are many more growing pains to come, Citi added, but the bank remains confident that the ecosystem will mature as technology develops. Once this intermediate skeuomorphic straddle state is crossed, the new disruptive technology breaks free from the old and ideally directionally trends towards the envisioned end state. Citi envisions this end state as a digitally native financial asset infrastructure, globally accessible, operating 24 times 7, 365, and optimized with smart contract and DLT enabled automation capabilities, which enable use cases impractical with traditional infrastructure. So that's one of the reasons Coreum was built to fulfill the Sologenic's needs in tokenization with smart contracts and smart tokens. So tokenization is a big thing. And as I said, when I went to the when I went to the Ripple workshop, one of the things that they said was one of Ripple's most important things that they're trying to do, or that they're doing, is tokenization of assets. Hence we have Sologenic on the XRP ledger. Let's take a look at the chart. This is the Solo chart, my people. Sologenic, so low, 16 cents at the moment. Still in that range. Support, resistance, support, resistance, support, resistance, looking for support, resistance, support, resistance. So that's what we're in, my people. We've got 15 cents on the table. If we come and hit this uptrending white line, so if we hit this yellow line, we've got 22 cents, 21 cents. But we're still trying to break out of, let's have a look quickly. We're still trying to break out. And remember I said in previous videos, we're trying to invalidate this, what looks like a bear flag. Because if this is a bear flag, then we could be coming lower. But either way, we're long-term holders of Sologenic. You know, for those who have a trading bag, you've got a trading bag, but we have a long-term bag as well, so it's not a problem. So we've got a resistance at 17 cents, 0.17888, 0.19732, 21 cents. So that's where our resistance is at. We're trying to break through all of that. So we'll see how it goes. We'll have to take a look and see how it goes over the next coming days to weeks. Let's take a look at core. All these lines, my people. Let's have a look at Coreum. Look at Coreum. Let's have a look at Coreum. So here we are with the Coreum chart, my people. And as you see, Coreum, we've got 0.229 as a support, 22 cents 99 as a support. Beneath that, we've got 21 cents, 0.2147, if we come to this uptrending line, we could hit it at 20 cents. Resistance, we've got 0.2447 still, 0.2607, and if we can make it above there, we can maybe push to the 29.67 cents. So we'll take a look at that over the next few days, see how we're doing. But that's the support and resistance areas that I can see. My people. Bitcoin, let's have a look at Bitcoin. Bitcoin in the daily. Okay, in the daily. In the daily, where we've come above, we broke above this line, which was an uptrending resistance, but we've come to this white line, so we're basically between, we've got support at 26,559, resistance at 28,636. But if you look at the if we look at the MACD, let's look at the MACD and the RSI. The MACD looks like it wants to def cross on the daily. So if we def cross on that on the daily, we're coming down. The RSI looks, we're overbought. We've come up. We've gone from the 30, let's say the 30 to the 70. We've been overbought. So we've come down. So we're coming down, shall I say. Look like we tried to have a retest, but we've been rejected at the 70 again. So Bitcoin looks like we're coming down. We've got a support. So underneath the 26,559, my next support that I see is 24,781. But in my eyes, I'm still trying to figure out what pattern are we between. Are we between this inverted symmetrical triangle? Or are we on this uptrend between the yellow and blue line? Yellow and blue line? Or are we between the two yellow lines, which is the inverted symmetrical triangle? And I keep saying, if the inverted symmetrical triangle pattern plays true, then we've come up, we can go up higher, but if we break this line and come back down, then we would have gone lower. But I don't want to fud it up. We'll see how it goes. I'll keep you all updated, my people. Appreciate you all for the love and support. If you got anything out of this update, like, subscribe and share, and I'll catch you on the next one. Peace.